Welcome to Polytechnic Nilai Educast. Today, we explore Islamic finance, principles, growth, and Fintech integration. Get ready for new insights. Let's go, guys.
Welcome to Polytechnic Nilai Educast. I'm Mohammed, your show guide. Joining me today is Sophia, an expert in Islamic banking and finance. In this episode, we'll explore Islamic finance, principles, growth, and Fintech integration. Let's get started. So, Sophia, how do you feel today in this Educast?
Hello, everyone. I'm Sophia, and I'm eager to discuss Islamic finance, principles, growth, and Fintech integration, this topic is very interesting, and I hope I can share as much knowledge to everyone. Let's dive into it, Mohammed.
Okay, welcome to the deep dive. We're looking at a topic today that's much bigger and maybe more relevant to the wider financial world than you might first think. Islamic finance. And this isn't just, a basic intro. Our source, a recent Fintech weekly piece, really lays it out as a deep dive into a distinct and pretty impactful financial system.
Exactly.
We're aiming to go beyond just definitions, really understand its core operations, its global momentum, and importantly, how tech is reshaping its future. Fast.
Yeah, the article digs into the fundamental why, the principles from Sharia, but it also gets really practical on how the contracts they use, where it's surprising global spread, and definitely the future, how it's meshing with a cutting-edge fintech.
So for you listening, our mission here is to unpack not just what Islamic finance is, but really how it works fundamentally. Why it seems to be gaining traction across the globe and how technology is, pushing it into new areas. Get ready to maybe think a bit differently about financial systems?
Yeah.
Okay, so let's unpack this then. At its absolute heart, what defines this system? What are the rules?
Well, it all starts with those core Sharia principles. Probably the most famous one is the strict ban on interest, what's called riba.
Right.
But just as vital are the prohibitions on things like excessive uncertainty, that's gharar, and also gambling or speculation, which is maisir.
Okay, so moving away from just making money from money over time or from pure bet.
Exactly. And it's not just about avoiding things. These rules actively push towards risk sharing between the parties involved, and they demand that transactions are linked to actual tangible assets or real economic activity. The source really hammers this home. It frames Islamic finance not just as rules, but as a coherent economic model, one built on transparency, ethical responsibility, and crucially, financial stability.
And what's just fascinating, I think, is how this system, built on these pretty distinct principles, has reached such a significant global scale.
Oh, absolutely. The data the article quotes is pretty striking. The global industry was valued around, $3.38 trillion in 2023. And the projection is for it to nearly double, hitting $6.67 trillion by 2027. That's serious growth.
That is remarkable. And it's happening everywhere, right? Not just in Muslim majority countries.
Not at all. The main standard setting body, the Islamic Financial Services Board, the IFSB, it has members across 58 countries. So that footprint covers major financial centers in Europe, think the UK, Luxembourg, but also right across Africa, the Middle East, Central Asia, Southeast Asia, South Asia. It's genuinely global.
And it's not just that banks are operating there. We're seeing non-Muslim countries actually engaging directly with the system. Like issuing Islamic bonds, Sukuk. The article points to the UK doing it, Luxembourg, Hong Kong, South Africa even. They're seeing benefits, maybe diversifying investors, but also recognizing that reputation for stability, for ethical investment.
Yeah, it shows it's moving beyond just a religious niche. It's being recognized for its kind of economic characteristics. And what's even more interesting, as the source gets into later, is how this established system is now plugging into really cutting-edge tech. That connection to fintech and even decentralized finance, DeFi, it's not just theoretical. It's seen as a major driver for expanding its reach and making it more efficient.
Which is exactly where we need to go next.
Yeah.
Okay, so you've got a sense now of the basics, the core ideas, and the global scale. Let's get into the nuts and bolts.
Yeah.
How did these principles actually work in practice in banking?
Right. So as the source lays out, these core principles translate into specific Sharia-compliant contracts. These are the actual tools they use day to day in banking and finance.
Okay, so it's not just no interest, it's yes to these particular ways of structuring deals, like Mirbaha.
Right. Murabaha is very common, often for financing asset purchases. Instead of just lending money and charging interest, the bank actually buys the asset, say a car or equipment, directly from the seller. Then it sells that asset to the customer at a pre-agreed price, which includes the original cost plus a profit margin. Payment can be deferred, made over time. So the profit comes from the sale, the trading of a real asset, not from lending money itself.
Ah, okay. So the bank takes ownership, even if it's just for a moment. That ties the finance directly to something real.
Yeah.
What about the models that involve sharing the risk?
Yeah, that's where you get things like Mudharaba and Musharaka. Mudharaba is essentially a profit-sharing partnership. One side, often the bank, provides the capital. The other side provides the expertise or does the work. And they agree upfront on how they'll share any profits. Losses, generally, are borne by the capital provider.
Okay.
Musharaka is more like a joint venture. Both parties chip in capital, maybe expertise too, and they share both the profits and any losses, usually based on how much they put in.
So the bank isn't just a detached lender then. They're actually a partner, sharing the potential downside, not just collecting interest regardless.
Exactly. That inherent risk sharing is a massive difference from conventional debt. There, the lender typically gets their fixed return, even if the borrower's venture fails. The source actually argues this focus on shared risk and real assets encouraged more prudent behavior. It suggests it's partly why Islamic banks were, somewhat shielded from the toxic debt that caused the 2008 crisis.
Because they were tied to real stuff, not just complex financial instruments.
Pretty much. They were dealing with assets and shared outcomes, not just layers of debt built on abstract value.
Okay, and then there's Ijara. That's leasing, right?
Exactly. Simple concept. The bank owns an asset and leases it out to a client for a regular rental fee. Often there are options for the client to buy the asset eventually. The rental fee is okay because it's payment for the actual use of the asset.
Got it. And finally, Sukuk. We mentioned them before, these Islamic bonds. How do they differ?
Right. Unlike a conventional bond, which is basically an IOU representing debt, Sukuk represent a share of ownership in something tangible. It could be an asset, a pool of assets, or even a specific project. So the returns paid to Sukuk holders aren't interest payments. They come from the actual income generated by those underlying assets or the project.
Ah, okay.
This directly links the investment to real economic activity, sticking to that core asset-backed principle.
It's really quite fascinating how these different structures all flow from those core principles. And seeing these tools used all over the world is, pretty compelling.
It really is. And the article gives some great concrete examples. London, for instance. It's really cemented itself as a key Western hub. You've got over 20 Islamic financial institutions operating there.
Wangy.
Yeah. And the UK government itself, they have issued Sukuk twice. 200 million back in 2014, and then a bigger 500 million one in 2021. That's a major sovereign nation using this market.
And not just the UK. You mentioned JP Morgan in the US did a big Mirabaha deal way back in 2006.
Right. Hong Kong's issued Sukuk, becoming a key hub in Asia. Luxembourg was actually a real pioneer in Europe. They had the first Islamic financial institution in the West back in '78, first European member of the IFSB, first European stock exchange to list Sukuk. Real early movers. Mm-hmm. And South Africa, too, issued sovereign Sukuk in 2014, and again just last year in 2023.
So this isn't just like a marginal activity anymore. It's clearly integrating into the mainstream global financial system, driven by, stability and ethics.
That seems to be a big part of the appeal, yeah. Stability, ethical considerations, plus just diversifying funding sources.
Okay, now here's where it gets really interesting, I think.
Yeah.
How is all this cutting-edge fintech interacting with this, centuries-old system? The article suggests it's not just interacting, it's actually transforming it.
Yeah, technology is tackling some historical challenges and opening up genuinely new avenues. Blockchain and smart contracts are a perfect example. You can basically embed the Sharia compliance rules directly into the code of a transaction, automate the verification process,
making it transparent and maybe cheaper.
Exactly. Huge potential for transparency and reducing those compliance overheads.
What about tokenization?
Ah, yeah, that's another big one. Islamic finance needs to be asset-backed, right? But sometimes those assets, like real estate, aren't very liquid. You can't easily sell a small piece. Tokenization lets you break down ownership of that real asset into digital tokens. These tokens can then be traded much more easily on secondary markets.
So creating liquidity in a Sharia-compliant way.
Precisely. You're trading ownership stakes in a real asset, not just debt.
And AI, where does that fit in?
AI is proving super useful for compliance, actually, real-time screening. It can analyze transactions almost instantly against huge databases of, say, prohibited industries or activities, makes scaling up much more practical.
Okay, and even DeFi, decentralized finance.
Yep. We're starting to see Islamic DeFi platforms emerge. They're trying to apply these core principles in that decentralized space. Think things like interest-free lending pools or halal yield farming, where the returns are generated from permissible asset-linked activities, not from, conventional lending or speculation.
Okay, if we pull back and look at the bigger picture here, the source makes a really interesting connection. It points out how Islamic finance's built-in ethical investment rules, screening out things like alcohol, gambling, pork, conventional interest-based finance, weapons, how that aligns really closely with the massive global trend towards ESG investing, environmental, social, governance.
Absolutely. It's a natural fit in many ways. An investor who's focused on ESG criteria might look at Islamic finance and see a system that already filters out many ethically questionable industries just based on its own long-standing principles. It doesn't have to be for religious reasons. The outcome aligns with broader ethical investment goals. And that definitely widens the potential appeal beyond just Muslim investors.
So pulling it all together, what does this all mean? The picture the source paints is of Islamic finance, not just as some kind of alternative. It's presenting it as a comprehensive financial framework. One with its own distinct philosophy focused on fairness, ethics, real economic activity, and stability.
Yeah, and the conclusion the Fintech Weekly article reaches is pretty optimistic, quite forward-looking. It suggests that this mix, the fundamental resilience of the model, its constant evolution boosted by fintech, the growing global regulatory acceptance, and that rising tide of ethical and ESG investing. All this positions Islamic finance to play a genuinely significant role in the future financial landscape. The source actually says explicitly that ethical banking can become a global standard, and Islamic finance is a prime example of how that might operate.
That's a really powerful thought to leave us with. So for you, think about the global financial system, where it's heading. If you have a system built from the ground up on principles like risk sharing, tying finance to real assets, banning pure speculation, and showing this kind of global growth, and now it's rapidly adopting the latest fintech. What does that suggest about where finance as a whole might be heading? Are there aspects or lessons from this model that could have universal value, regardless of the specific religious context? Definitely something worth...
Okay, Sophia, to wrap up our discussion, let's focus on this powerful conclusion. Islamic finance is more than an alternative to conventional banking. It is a comprehensive financial system that emphasizes fairness, ethical investing, and financial stability. My question is, can you explain what makes Islamic finance a comprehensive financial system rather than just an alternative to conventional banking?
Certainly. Islamic finance isn't just a substitute for conventional systems. It introduces a holistic approach based on ethical principles like fairness, transparency, and risk sharing. These principles influence everything from personal banking to large-scale investments, making it a complete and values-driven financial ecosystem.
You mentioned fairness and ethical investing. How do those values translate into actual financial practices within Islamic finance?
Great question. Fairness in Islamic finance means both parties in a transaction share risk and reward. For example, in profit-sharing contracts like mudaraba, the investor and entrepreneur both gain or lose together. Ethical investing also means avoiding industries that harm society, like gambling, alcohol, or exploitative finance.
The conclusion also highlights financial stability. How does Islamic finance contribute to long-term stability?
Islamic finance prohibits speculation and requires every financial product to be backed by tangible assets. This reduces the kind of high-risk behavior that contributed to past financial crises. So, it promotes sustainability and real economic value instead of short-term profits.
Looking globally, what's driving the growing appeal of Islamic finance, even outside Muslim-majority countries?
What's attracting global interest is the ethical and stable nature of the system. Institutions and investors are increasingly aligning with ESG values. Sukuk, for example, offer fixed returns and are asset-backed, making them attractive for investors seeking ethical and lower-risk instruments.
The conclusion mentions fintech, blockchain, and AI. How are these innovations shaping the future of Islamic finance?
They're revolutionizing access and compliance. Blockchain brings transparency to transactions. AI tools are helping institutions maintain Sharia compliance efficiently. And fintech platforms are democratizing access to Islamic financial services, especially for underserved populations.
Finally, do you believe Islamic finance can truly become a global financial standard?
Absolutely. Its principles are universal: fairness, trust, and shared prosperity. As more people look for finance with a conscience, and as technology bridges the accessibility gap, Islamic finance has all the ingredients to become a global benchmark for ethical banking.
Alhamdulillah, what a truly insightful and eye-opening discussion on the role and potential of Islamic finance on a global scale. We've learned that Islamic finance is not merely an alternative to the conventional system. It is a comprehensive framework built upon the principles of fairness, ethical investing, and financial stability. With foundations such as risk-sharing, asset backing, and ethical compliance, Islamic finance offers a model that is not only relevant but increasingly accepted worldwide, even in non-Muslim countries. Innovation through Fintech, global regulatory support, and the growing awareness of ethical investment are positioning Islamic finance to play a major role in shaping the future of global finance. Here at Educast Polytechnic Nilai, we hope today's session has been beneficial to all of you, whether you're a student, educator, or industry practitioner. Stay tuned for more inspiring and informative episodes in the future. With that, we conclude today's session. Thank you for joining us. Assalamu alaikum wa rahmatullahi wa barakatuh.